What's up, boys? Welcome back to the YouTube channel, the fucking banging, almost at 1,000 subscriber YouTube channel. But I'm out here in Cancun right now, just showing you what's possible with this trading shit. You stick to it, you never know what could happen. Might end up in Cancun. Just jokes, though. Family brought me out here for a little winter/Christmas vacation, but I just want to come on here and show you guys little 4 hour gold W we got what's it called? Got involved in. So let's start on the 4 hour, like all my trades, right? First thing I do is look for the trend, right? Where's the trend? And I kind of use the moving average to help me with this. But the trend, if we use our eyes, it looks like price, is doing that. Price is going down, right? Price is going down. Now, where's the most recent high? Where's the most recent low? Take my fib tool, this high, the low right here. So, what did I do? I look for draws on liquidity now within this range. So, this right here, imbalance, then the main imbalance right here is this bearish for value gap. Then you could also say this order block, bearish order block. We see price tap in, sweep these highs, right? Then we also see we're sitting at this moving average. So we're at a good spot to be short, right? Then let's check it out. So price moves from internal resting liquidity to external. Now what's internal? Internal is going to be any imbalance. So an unmitigated order block, an unmitigated for value gap, that's internal resting liquidity. And then price moves from that to external liquidity usually. Usually, you don't ever know. Sometimes news could really fuck your plans up. But what I'm doing now, I'm putting a little trend line, boys. Use your trend lines. So what does this trend line represent? This trend line represents external range liquidity. So if we're bearish, where does price go? If we're bearish, we know price is bearish. We just filled an imbalance. Where's price gonna go next? It's gonna go for the fucking lows, baby. So what do? I mark out lows. Look at how this low and this low never got tapped, right? We never broke these lows. Also these down here. But I'm just going to focus on the most prominent one, right? So what do I see? I see a low here, haven't swept it. So I'm using that as my draw on liquidity. I can, hold on. Put a little magnet thing here. Or I'll just do this. Just so you guys can see liquidity, money sign. So this is where price is gonna head down for. Now this looks cleanest in the 1 hour, but I'll go down to lower time frames. But we see price is coming up, bullish price action, bullish structure. What do we see? We failed to displace past this high, so we make a lower high, and then we break structure here. Now when I break structure here, what does that entail? This break of structure shows me that market is ready to move down and take out these lows down here. So now it's just a matter of how I'm gonna get in. So I see price break structure. I see this high and this high. Now this is what people get kind of confused on, right? But the way I do it, it's what I'm drawing out is this purple rectangle box represents imbalance. So we see this bearish for value gap, then we see this high, we fill this imbalance, and we also touch this order block, right? So I'm going to use that high because there's no reason price, if we're truly bearish and going for these lows, there's no reason for price to come up past this high and come into this area If price does come past this high and into this area, it's likely that price is actually bullish, and trend is probably going to switch. I'm probably going to take out this high as well, right? So if we're sticking with the trend, we know that right here we're at that 4-hour moving average. We see a beautiful break of structure in the hourly, and then we see even more confirmation because we break structure with imbalance. So there's a new fair value gap printed here, which is another draw and indicator of resistance for price, right? And we have a beautiful 1 hour order block with a displacing candle after an engulfing candle. So a lot of confluences here, right? So on a 30-minute, we check it out from this high to this low. Set the fib, set the entry at the 71% retrace. We get tapped in, and what happens is beautiful. Boom. I wake up, look, account's up $1,200, bro. I take it, dude. Now, that's gonna cover my trade. And as we see here, another missed opportunity this morning. Give you guys a second to identify it. All right, that was enough seconds. But let's go back right here, and let's see if you guys understand why I should have taken this one. You guys remember from earlier I said that this was our draw on liquidity. Well, look, this low never broke this low, so I know price is still looking to take out this low. So what should I have done? I should have drawn a new range from this high to this low, because look, we filled all the imbalance, so there's no reason for price to go move past above this high. So I should have drawn the fib from this level to this level, put my entry here, boom, and then this would have been a beautiful 2 bangers back to back. We see we're also around that moving average level, order block here, imbalance here. This is beautiful. Missed out on this opportunity though. But that just goes to show that the system does work, the strategy does work. The problem for me now is just eliminating the stupid losses, the over trading, the bad setups. Because right now I'm about break even. That's what I would say. I'm a break even trader, because I'm able to execute and win trades. But what's stopping me from being that profitable trader I know I can be are those dumb, stupid losses. And I can go to my day trading thing. I have all these trades mapped out here. I kind of want to show you guys this one too, because this was ridiculous. You guys should see this trade right here. I took this trade right here, and somehow this was a loser because of the fucking funding pips spread. Somehow this trade stopped me out here. So let's go back and let's analyze this for a second. We see on the 4-hour, we're very overextended. We sweep this high, so now I'm looking for a retrace. Hella imbalance to fill. That's my draw, that's my target, all these imbalances and lows here. We break structure on the 15-minute and 30-minute. We have imbalance. I wait for price to retrace. I enter around 9:30, and this is on Friday, right? So first of all, on Friday, I see price wicks down, takes me out on the chart, but then because of the spread, this didn't execute, right? So if we keep going forward, I'll tell you when fucking I got executed. Right here, I got stopped out. So 17 pips to what? To 6. Fucking literally a third of my stop. 2/3 of my stop not accounted for, and I get stopped out because it's spread. And you know what I mean? You live, you learn, and then it takes me out again. I woke up, I looked at the chart, I'm like, oh shit, beautiful, I won. I go into my thing, and I got stopped out, and because the spread and commission was so bad, I lost 600. I didn't even lose the 0.5% I'm risking. I lost $100 more. You can go into my trades out so you guys can check this out too. That's this trade right here. Euro NZD. Such an annoying thing to have happen. Then you see this gold trade, just proof that it did work out. But yeah, that'll do it for this episode. You live, you learn, as you go on, keep trading. I erased this pair from my watch list because I am never letting that kind of shit happen to me again, dude. I'm never gonna be right in my analysis and then take a loss for no reason. You know what I mean? Like, this should have been two winning trades, if anything. It's 5%, not negative 1%. But it's okay. I know I am profitable, and I know I will be okay in the long run. So we chillin'. But that'll do it for this episode of my freaking YouTube videos. If you guys learned anything or enjoyed watching, leave a like, give me a little subscribe, and I'll see you on the next one.